All right, I'm gonna go over some opportunities that were available today. Even today, every day there's something. So um, in the morning in crude, which you had, market went up here and then bang. So it attempted to go higher, but it encountered selling, very, very clear selling, as it says, selling, right? And then it actually, I wasn't sure if it was going to give such a deep pullback, but it did. It gave a very deep pullback, and then the market went down, and now the buyers are back in. So that's the situation. So the opportunity was right here on the selling pullback to take the short right here. That was the opportunity to take the short after the selling wave. Take it. What really strengthened the conviction? What for this it's really good to have the tape reading chart because it basically can show the accumulation and distribution. All right. So I can show the effort and all of that. So now watch this over here. You had 6,200 contracts, and then you had that selling wave. This selling wave is this down column. So 6,200 contracts here. This is distribution. You can consider it effort if you'd like, whatever, right? So the market goes up, has all of this volume, and then breaks. Done deal. It means that after it breaks, that first of all, this is distribution. Second of all, on the pullback, this is if price makes it this far, they're going to have a hard time because they'll have to absorb all of this and let them break even, and then if they do that, they have to go pretty far back up. So the bottom line, and there's a really large print right here. This 123 is very large print. So this is, I think this was maybe the initial distribution. The 123 is 123 times 100. So the market went back up there, 62, and broke. And then the downtrend basically happened. So, the selling opportunity. And then, so it keeps on going down, down, down. You have a very clear breakout right there. Breakout of this low on 3,900 and 3,100. So that's a very good sign. That means they broke with authority, and it goes sideways, and then it goes down for the final wave down, and then finally you have some. And after that you have the short covering, which is right there. Basically, they're covering the positions, and now the buyers are in, and this is all they're buying, right? So again, the way you want to view this, the volume, the high volume, holding, high volume cannot hold. Anytime you have high volume on the up wave, on the way up, that cannot hold, and price goes below, there is a high likelihood that it is distribution, because if it was smart money, they would not let their position go underwater. For example, here, the 7,900, right? So first you have to see the print. You're like, what the hell is this? And then it goes up. So that means there's chances that this is accumulation. Maybe it's short covering. I don't know. But there's a chance that's accumulation. Price should not be able to break. It may tap a little bit lower or spring it, but it should not be able to take it out. If it's a smart money, they will not let their position break. They won't let it go underwater. Because who the hell, 7,900 contracts to what? To lose money on it? Of course not. They know the best prices. Just like here, was that 12,300 contracts? What happens? It goes down. Do you see it getting taken out? No. So this is what you got to understand. And by the way, this is in Wyckoff also. If you take a look at his first study, when he talks about the hyperthermic maneuver, and what he'll do is on the New York Times study, is where he talks about the hyperthermic maneuver in that first New York Times study, you'll see at the top when he talks about distribution, he says, look, this bar has so much volume, but what happens? It does not hold, and then price trades below it, and then he makes the point that when you have volume at the top, and it cannot hold, price goes below, it's distribution, it's distributive activity. Anyway, so yeah, obviously you can just reverse the logic for accumulation, right? If you have volume from the bottom and then price goes the other way, then it's accumulation activity. So as price is going lower, if you have volume and then it quickly goes the other way, it's accumulation activity. Anyway, so you have these all at the turning points. So when I saw this at 6,200 and then this break, this high volume cannot hold its distribution. That is now yes, if you can have heavy buying after that come up and take it out. I mean, there's always a chance of that. That's the risk you're willing to take as a trader. So what I couldn't believe was that it went all the way back to that same area where they blocked it. You see that? The 6,200, the break, and it go all the way back to the same area, and these guys said, nope, oh no you don't. You're not going to get past this. This is called trading with smart money, the trading with the CM, trading with the wind at your back, or with the CM, or the CM in front of you, or what is it? Following the footsteps or something like that. Anyway, so here you see that, and there's the opportunity, then finally it breaks, and then here it goes down, and here where you have that 31, this is a major issue for the shorts. When they see this, they have to consider exiting their position. And now you're going to see something really cool. On the bar chart, this bar is the biggest green bar in at least 100 green bars. This green bar, biggest in 100 green bars coming from the bottom where there's all this volume. I know that this is on a bar basis. It's a change of behavior on a bar basis. All right, which means basically a change of behavior. This is another tidbit I'll give you. It's not just you're taught that a change of character, a change of behavior, sign of strength is a wave. But what you're not taught is that it can also be a bar. It can be a bar on the daily, or it can be a bar within the wave. For example, the change of behavior buying wave near the bottom typically has a change of behavior bar. And the same thing with the selling waves. Here it's not that prominent. It's only about biggest in 17 waves. This is biggest in, actually, this is the biggest in 51 bars. This one right here. And the biggest in 21 red bars. So this is what you see. And so, I mean, I don't know what else to tell you. The other thing is that as it went up, right, this 62, it very clearly, you see the 108 up over here. What is that 108? It's just a cumulative volume. What is the cumulative volume? 108 times 100. So that's 10,800 contracts in this upwave. And it broke. 10,800 contracts. And guess what? That's called effort. Effort reward, followed by the break, followed by the retest, where the sellers blocked it. And you know, a lot of times you won't have the guts to put on this position. Why? Because the rally, the pullback here, right? It's very strong. You see this green bar? And you see this green bar. These are pretty strong green bars. They're high-end closes. Both of them are high-end closes, closing almost at the high. And they're wide range. You know, they don't show any shortening of the thrust, or they don't show any selling tail wicks or anything like that. They'll show very strong. So why would you put on this position? First of all, generally, you probably wouldn't, unless you understand what you're doing and have the data that tells you that there's a hell of a lot of selling in the background, and you can leverage that. Right? So that's a wrap. It goes there, they block it, and it sells. All right, so there's your effort reward or distribution. There's your break. That's your pullback entry to the test. There's your breakdown. There's a test of the breakdown. And there's your next breakdown. The problem with this next breakdown is they have short covering right after it. That short covering here is your change of behavior. Right here, the 93. Why? Look at the 93 is bigger than 17, 22, 52, 12, 40 since the high where you have 108. So there's a chance of it being a, what's that word? A change of behavior or buying wave or whatever. And it has accumulation in it. It could be short covering accumulation or whatever, but there's buying, right? We know it's buying. And then after that, the massive follow through with the strong buying. Basically because it cleared this area, and then it continues. And now it's over here. So now there's no point to buy the pullbacks because, you know, the time of day and all of that, right? So that is a quick study on this. All right, let's go to the ES and I'll show you guys something. So first of all, this whole rally began with this buying wave over here. This buying wave, and not only that, but even the selling wave you can trade. It's just with the ES, it's very, very tricky because you will see the buying and sell signals. They can be constructed. I thought they couldn't be constructed, but after many attempts, I'm able to kind of do it right, you know. So the problem is, though, the fucking problem is the ES is a stop running freak. So, for example, here you have the selling wave, you have the lower low, you have very good upthrust right here of this high, gets upthrusted, and it's going low, but it cannot get below these lows. The thrust shortens, and they did this move up all the way back here to stop out all of these guys, and including me, by the way, and then run it down. Right? And then when it goes down in this area, they initiate the professional buying. This is professional buying because buying off the lows is professional buying, like right here. And after that, you know, of course, there's no nice deep pullback. So what they're going to do is rally up. Here's some selling. Here's some better selling. I couldn't get this. And then basically you have your little move. You have a test and a little move. Would I have taken this? Well, let's see what the tape reading chart tells us. All right, so all of you Wyckoff guys, I'm doing this for you. So give me a second. Watch this now, okay? So now you have this market going down, and this is the tape reading chart. So I'll show you what happened. It goes down, and then right here, I was very confident that there would be a reversal. No, I did not trade this market. I was done. So for the trading crew. So here, right here, right here. Okay, now watch. Market goes down, 76,000 contracts, right? In this 1, 2, 3, 4, 5, in this column of 5 O's, 76,000. If you look at the next column, it's two boxes, not 5, but 2. How much do you think this volume should be? If you have 5 boxes and it has 76,000, why is it that you have 2 boxes and only an extremely high amount of volume? Because you have 97,000. Again, 5 boxes, 76,000. Here, 2 boxes, 97,000. So on this down wave, you have effort or accumulation. That's what it is. And then they move it sideways. They build the base and they pop it. So that's what initiated this movement up here. Now, as that movement over there is occurring, you now have this selling, this 34 and 53, right? Now, again, the same logic. Yeah. Here you have 3 boxes with 50,000. Here you have 2 boxes with 75,000. That is distribution or effort or profit taking. I don't know, but it's bottom line, it's selling. Just like this is buying. This is buying. This is selling. And then finally it breaks, right? So I mean, this is just I don't know, this is what happens. So this is why you combine the tape reading chart with the wave chart. This is also why Wyckoff combined the tape reading chart with the wave chart. And this is actually, if you want to learn more about it, you can watch. Actually, I'm sure it's not there. You have to go to the Wyckoff course. Take a look at Division 2, and you will see that there are like 5 studies that focus on the tape reading chart. There's actually more than that, but you want to focus on the 5 studies done by Wyckoff, and then go into that. All right, the other ones I don't know what they're doing, but the ones that he did, at least there's a consistency there. It just makes a little bit more sense. Anyway, so where's the buying in the ES? Right here. That was done on this shortening of the thrust low right here. This inability to follow through right here, which what is what? It's your spring. Yes, it's a spring in a downtrend and all of that, I know. All right, so this spring in a downtrend has a base, high volume effort, accumulation, that initiated this pullback, and in which there was effort or selling up here, and confirmation in the form of some down movement, and that set up this what you're seeing now. Now, am I saying, I'm saying buy or sell, but I'm saying that this is very, very important, and when you're able to see the actual buying and selling along with the wave chart, right? Because this is just a rotation to go back down. Now we have to see what happens here. Why? Because you're back into this accumulation area. You see, this is the accumulation area. This is the distribution area. You had the accumulation, you had the pop, sell it, bring it back into accumulation. It's right at that level. And guess what? That's where you have green bars now, because someone must be using that to buy off of. So we'll see what happens, but that's the idea. Anyway, I'll try to do more of this because I want to go to the actual what Wyckoff taught about buying and selling and trading. I think that's all for today. Thank you. Have a good weekend. Bye.